think about your smartphone. You use it to track your steps, budget your expenses, and stay updated with reminders. It gives you the right information at the right time to make better choices. Now imagine the same thing, but for a business. That's the role of accounting as a source of information. Welcome. In this video, we'll explore how accounting doesn't just record financial data, it communicates vital insights that help people make decisions, predict the future, and measure success. Every time a business pays a bill, makes a sale, or earns revenue, an economic event happens. Accounting captures each of these events step by step. It identifies, measures, records, and communicates them as useful information. But the process doesn't stop there. The goal is not just to record, but to disseminate, to share this information with those who need it to make smart decisions. Good accounting information empowers people to make economic decisions like investing, lending, or expanding a business. Predict and evaluate cash flows, how much money will come in or go out. Assess management efficiency, how well resources are used. Understand financial risks, opportunities, and social impacts. In simple terms, accounting converts data into decision-making power. Gone are the days when an accountant just maintained ledgers. Today's accountant is like a data analyst, advisor, and storyteller rolled into one. Their job is to observe and filter relevant events, process transactions, and prepare reports that make sense to people inside and outside the business. But how do they ensure this information is actually useful? That's where the quality of the information comes in. Over time, accounting has evolved into specialized branches to serve different needs. Financial accounting records and reports past financial data to show profits and financial health. Cost accounting analyzes costs of goods and services, helping businesses price and control expenses. Management accounting supports internal decision-making, forecasting sales, evaluating profitability, or planning for future growth. As businesses grow more complex, so does accounting. Today, we have human resource accounting, social accounting, and even environmental accounting that measure impact on people and the planet. From tracking employee value to measuring carbon footprints, accounting is no longer confined to just money, it reflects values too. Not all information is good information. To be truly valuable, accounting data must meet 4 qualitative characteristics. Reliability, it should be truthful, verifiable, and free from bias. Relevance, it should be timely and impact decisions, not just sit in a file. Understandability, users should grasp its meaning easily. If it's too complex, it loses its purpose. Comparability, it should allow us to compare across time and with other organizations. Think of accounting reports like weather forecasts. Just as weather predictions help you decide what to wear or carry, accounting helps businesses decide where to invest, when to cut costs, or how to plan next quarter. Both depend on accurate, timely, and easy-to-read data. Let's wrap up. Accounting turns raw financial data into meaningful information. It supports decision-making across various user groups. The role of the accountant is evolving beyond just numbers to insight and analysis. Useful accounting information must be reliable, relevant, understandable, and comparable. In the next lesson, we'll explore the objectives of accounting and why keeping records is just the beginning.